Top 25 Financial Crime Analyst Interview Questions and Answers. Welcome back to the channel. If you're preparing for a financial crime analyst interview, this video is exactly what you need. Financial crime roles are critical in protecting organizations from fraud, money laundering, and compliance breaches. In this video, we'll go through the top 25 financial crime analyst interview questions and answers, explained clearly so you sound confident and well prepared. Watch till the end because we'll share expert tips to help you stand out and land that job. Let's begin. 1. What does a financial crime analyst do? A financial crime analyst investigates suspicious transactions, identifies potential financial crimes, and ensures compliance with anti-money laundering (AML) and counter-terrorism financing (CTF) laws. They analyze customer data, monitor transactions, and create reports on unusual activities. They also collaborate with law enforcement or compliance teams to ensure that suspicious activity reports (SARs) are filed correctly. In short, they act as the first line of defense in detecting, preventing, and reporting financial crimes that could harm the institution's reputation or breach regulations. 2. Why did you choose a career in financial crime analysis? I chose this career because I'm passionate about integrity, data analysis, and protecting organizations from financial risks. Financial crime analysis combines critical thinking with investigative work. It's intellectually challenging and socially valuable. I find it rewarding to identify suspicious patterns and contribute to a safer financial system. Moreover, with the rise of digital payments and global banking, the role is becoming more vital, offering both purpose and long-term career stability. 3. What is AML, and why is it important? AML stands for anti-money laundering, a set of laws and procedures designed to prevent criminals from disguising illegally obtained funds as legitimate income. AML is essential because money laundering fuels terrorism, corruption, and organized crime. Without strong AML measures, the financial system becomes a tool for crime. Financial crime analysts ensure compliance with AML regulations, monitor customer behavior, and report suspicious activity to maintain financial transparency and protect the organization's integrity. 4. What is the difference between AML and KYC? While AML and KYC are related, they serve different purposes. KYC, Know Your Customer, focuses on verifying a client's identity before onboarding, collecting documents like IDs, proof of address, and financial background. AML, Anti-Money Laundering, involves continuous monitoring to detect and prevent suspicious activities after the client has been onboarded. Essentially, KYC is a preventive step, and AML is a reactive process that ensures ongoing compliance with financial crime regulations. 5. What is a suspicious activity report, SAR? A suspicious activity report, or SAR, is a formal document submitted to financial authorities when a transaction appears unusual or potentially linked to criminal activity. Analysts must submit a SAR promptly and include detailed evidence supporting the suspicion. The goal isn't to prove guilt but to raise a red flag for further investigation. Proper SAR filing ensures legal compliance and demonstrates that the organization takes its financial crime prevention obligations seriously. 6. What are red flags for money laundering? Common red flags include unusually large cash deposits, frequent international transfers without clear business purpose, complex transaction patterns, sudden account activity changes, and clients unwilling to provide identification. Other indicators include structuring, breaking large transactions into smaller ones, transactions involving high-risk jurisdictions, or third-party involvement without justification. A skilled analyst connects these signs, cross-references data, and determines whether further investigation or escalation is needed. 7. How do you stay updated with financial crime trends and regulations? I stay current by following updates from regulatory bodies like FATF, FinCEN, and OFAC. I also subscribe to industry newsletters, attend webinars, and complete ongoing compliance certifications such as ACAMS. Additionally, I engage in online communities where professionals discuss recent financial crime cases and topologies. Staying updated ensures that my analysis aligns with the latest red flags, sanctions lists, and evolving methods used by criminals. 8. Describe the stages of money laundering. Money laundering typically involves 3 stages. 1. Placement, introducing illicit funds into the financial system, often via deposits or purchases. 2. Layering, moving the money through complex transactions to obscure its origin, like transfers between accounts or shell companies. 3. Integration, reintroducing the cleaned money into the economy through investments or business operations. A financial crime analyst identifies irregularities at each stage to disrupt the process early and prevent further laundering. 9. What tools or software do you use in financial crime detection? Commonly used tools include Actimize, SAS AML, Oracle Mantas, and FICO TONBELLER for transaction monitoring. Analysts also use LexisNexis, WorldCheck, and Dow Jones Risk and Compliance for sanction screening and customer due diligence. Excel and SQL are often used for data analysis, while case management systems help track investigations. Using these tools efficiently allows analysts to automate alerts, detect anomalies, and make data-driven decisions. 10. Explain customer due diligence, CDD. Customer due diligence is the process of verifying a client's identity and assessing the risk they pose. It includes collecting information such as identification documents, business ownership, and transaction purpose. There are 3 types: standard CDD, simplified due diligence for low-risk customers, and enhanced due diligence, ED, for high-risk individuals or entities. Proper CDD ensures that financial institutions understand who they're dealing with and can monitor behavior accordingly. 11. What is enhanced due diligence, ED? ED applies to high-risk customers like politically exposed persons, PEPs, offshore companies, or clients from high-risk countries. It involves gathering more in-depth information, such as source of funds, beneficial ownership, and transaction purpose. Analysts may also conduct media screening or ongoing monitoring. ED helps prevent criminals from exploiting weak points in the financial system and ensures the institution meets regulatory expectations for high-risk clients. 12. How do you identify a politically exposed person, PEP? A PEP is someone in a prominent public position, like a government official or their close associate, who could be vulnerable to bribery or corruption. To identify PEPs, analysts use screening tools that match client names against global PEP databases. If flagged, they perform enhanced due diligence to verify legitimacy and monitor their transactions closely. The key is not to avoid PEPs but to manage associated risks responsibly. 13. What is sanction screening? Sanction screening involves checking customers and transactions against global watchlists issued by authorities like OFAC, UN, or EU. This prevents businesses from dealing with individuals, organizations, or countries under economic sanctions. Analysts use automated screening tools that alert them to potential matches. When a match occurs, it's reviewed to determine if it's a true or false positive before taking necessary actions like freezing assets or blocking transactions. 14. How would you handle a false positive alert? False positives occur when legitimate transactions are mistakenly flagged as suspicious. I'd first review the alert's details, transaction history, customer profile, and context. If evidence shows it's legitimate, I'd document my findings, justify my decision, and close the case. Proper documentation is crucial to demonstrate compliance. Reducing false positives improves efficiency and ensures focus on genuine risks while maintaining audit transparency. 15. What is the role of FATF? The Financial Action Task Force, FATF, sets international standards for combating money laundering and terrorist financing. It monitors member countries' compliance and issues recommendations to strengthen global financial systems. As an analyst, I refer to FATF guidelines to understand risk-based approaches and country-level risks. FATF's reports also help identify emerging threats, ensuring my institution stays aligned with global compliance expectations. 16. Explain the risk-based approach in AML. The risk-based approach prioritizes resources where risks are highest. Instead of treating all clients equally, financial institutions assess each customer's risk level based on geography, business type, and transaction behavior. High-risk clients receive enhanced due diligence, while low-risk ones undergo simplified checks. This approach allows analysts to focus their time and tools effectively, ensuring both efficiency and strong regulatory compliance. 17. What is transaction monitoring, and why is it important? Transaction monitoring is the process of tracking customer activities to detect suspicious patterns or anomalies. Automated systems flag transactions exceeding set thresholds or involving risky regions. Analysts then review these alerts to determine if escalation is needed. It's crucial because it helps detect money laundering in real time, ensures regulatory compliance, and protects the financial institution from reputational and financial damage. 18. How would you investigate a suspicious transaction? I start by reviewing the transaction's details, amount, frequency, counterparty, and timing, and compare it against the customer's known profile. Then I gather supporting data, such as KYC documentation and previous activity patterns. If red flags persist, I escalate to senior compliance or prepare a SAR. The key is to remain objective, document all findings, and ensure conclusions are backed by solid evidence. 19. How do you ensure data privacy during investigations? Data privacy is critical. I follow internal policies, ensuring access is limited to authorized personnel. Sensitive data is encrypted, and all communications are logged securely. When sharing findings, I anonymize personal details unless disclosure is necessary. Adhering to regulations like GDPR and Data Protection Acts protects both customers and the organization from legal risk, maintaining ethical standards throughout investigations. 20. What is the difference between fraud and money laundering? Fraud involves deceit for personal or financial gain, like credit card scams or fake claims. Money laundering, however, involves concealing the origins of illegally obtained funds to make them appear legitimate. While fraud generates illicit money, laundering legitimizes it. Both are financial crimes, and analysts must recognize their intersections since fraudulent activities often lead to laundering attempts. 21. How do you prioritize multiple alerts? I assess each alert based on risk level, potential regulatory impact, and monetary value. High-risk alerts, such as those involving high-risk countries or politically exposed persons, get immediate attention. I use a structured workflow and document decisions to maintain transparency. Efficient prioritization ensures critical cases are investigated first without compromising thoroughness across all alerts. 22. How do you ensure compliance in your role? I ensure compliance by adhering to the company's policies, AML procedures, and regulatory guidelines. I keep up with updated sanctions lists, maintain complete documentation, and escalate cases promptly when needed. Regular training and audits help strengthen compliance awareness. My approach is proactive, not just reacting to regulations but anticipating potential risks to keep the organization protected. 23. How do you handle pressure or deadlines? Financial crime analysis often involves strict deadlines, especially for SAR submissions. I stay calm by organizing my workload, using prioritization tools, and breaking tasks into smaller steps. Clear communication with teammates also helps manage time efficiently. I thrive under pressure because I see deadlines as opportunities to demonstrate reliability and accuracy, two essential traits for compliance professionals. 24. Describe a time you identified a suspicious pattern. In my previous role, I noticed repeated low-value transfers between multiple accounts linked to the same IP address. Though amounts were small, the pattern suggested layering. After deeper analysis, I escalated the case, and further investigation confirmed it was an attempt to launder money through microtransactions. That experience reinforced how attention to detail can uncover sophisticated schemes even when they appear insignificant. 25. What makes you the right fit for this role? I bring analytical expertise, regulatory knowledge, and a strong ethical foundation. My background in data analysis helps me interpret complex transaction data accurately. I'm also experienced with compliance software and understand the importance of timely reporting. Most importantly, I'm committed to continuous learning, staying informed about new regulations and criminal tactics. I believe these qualities make me a dependable and proactive financial crime analyst. And that wraps up the top 25 financial crime analyst interview questions and answers. If you found this video helpful, don't forget to like, subscribe, and share it with anyone preparing for a similar role. Your support helps us create more valuable interview prep videos every week. Remember, preparation and confidence go hand in hand. Keep learning, stay curious, and good luck with your interview. Thanks for watching, and see you in the next video.